Hi, it's Dr. Mike Jones, Managing Director of Impact Minerals Ltd, listed on the Australian Stock Exchange, code IPT.
Dr. Mike Jones, how are you, sir? I hope you're nice and calm.
I am indeed, Matt. Good to see you again.
Couldn't stop it. Nice poster, by the way. So, right, wanted to catch up with you. We saw each other in Australia, and I know we attempted to see each other when you were over here in London. You've done a deal, okay? HPA. We better talk to people. First of all, what is HPA? Let's go with the basics.
Let's get right down to it, and that's a fair enough question. It's high purity alumina. It's a particular form of aluminium oxide that's in increasing demand as we go through the energy transition, principally because it's used in two major areas, and that is one is in LEDs, light emitting diodes, and as we replace all of the old incandescent bulbs and the world grows, we're increasingly using LEDs. And then secondly, the big use is in the separators between anode and cathodes in your lithium ion batteries. And from what I understand, that's one of the reasons that the Samsung phones used to explode a few years ago, because those separators weren't doing their job. So HPA has a particular set of thermal chemical properties that make it unique, and it's in growing demand globally.
Okay, well, we've got to talk about this, okay? Because we've talked in the past, we've had some really brutally honest conversations about prospecting and exploration, and you've been very good at identifying where the project very early on where the projects will or will not work. So therefore, you've been able to kill them early. So that's been good, I think, good for shareholders in the long run. We have been talking about gold and battery metals in Australia. We're now moving into high purity alumina. Why this dramatic switch?
Look, that's a question I'm sure a lot of Impact shareholders and people who followed us over the years have been asking themselves. So, as you know, we set up Impact to look for a world-class deposit, and they're very few and far between. They're rare, and I'm not sure I've used this phrase before, but really it's not worth getting out of bed until you find one, and that can take a very long time. So look, over the years, we've looked at a lot of interesting projects, eclectic projects, left of center thinking, and on the off chance that somebody else had a brighter idea than us, believe it or not. And anyway, we came across this project. It's a very interesting story, which we'll get into. And when I found out about it and looked at the numbers and looked at the nature of the project and the simplicity of the mining and the growth of the market into which we hope to deliver the product, it was a oh crap moment, if excuse my language. We're going to have to do this project because it is so compelling, and unlike anything that I've seen before, in my entire career, in terms of a grassroots opportunity to get onto something that could, has the potential to lift us out of the junior space and become a global player in the high purity alumina market.
This has allowed you to kind of, I guess, step change, right? Where people go, oh, it's transformational, it's a big step change. But what do you know about it? When you say it was too good to kind of give up, we're going to stop chasing all this stuff that you and I have been talking about over the past year. We're going to go for this thing. What makes it a sure thing in your mind? What do you know about it?
So there's been a lot of work done. So look, the person who found the deposit is a guy, geologist I've known for a little while called Roland Gotthard, and he's well-known sort of geology consultant in and around town, and is a project generator in his own right. He's an exceptionally clever guy. He gave some thought to how alumina minerals or aluminium minerals might form and what processing techniques could be used to get that aluminium out. So we can talk about the different ways of doing it and why we've chosen this particular project. And so he worked out a process and then thought to himself, well, where are these minerals going to form? And the salt lakes of Western Australia, very unique geochemical environments, and just a wide range of deposits, everything from your Leary, the big uranium deposit, through to gypsum, lime sand, all sorts of weird and wonderful things. And he identified these two particular lakes, part of the Lake Hope system, in a relatively benign part of Western Australia, and went out there, did some sampling and discovered the minerals he was looking for, and hey presto. So he's done a lot of work at a scoping level, almost feasibility level of study on the economics and the environmental work, etc., that make this a very advanced project. So again, it was a brilliant insight that we were lucky enough to get on. So the deal is actually it's a very good deal for Impact shareholders, and there's I can give you the figures. So upfront, basically, it'll be 175,000 cash. There's 50 million shares, scraped 12 months, which at sort of 1 cent, 500,000, and then there's 30 million options at 1.125 cents, which have got a 2-year term. So that's about $700,000 worth of value up front. And then there are only 2 other payments, so they're all in shares. So when we complete the PFS, we can pay them 120 million shares in Impact, and that will give us an immediate 80% interest in the project. Now, obviously, it depends on the value of what those shares are, but we've actually capped that payment at $8 million, which means that, look, if we had a big discovery in one of our other projects that's running in the background on a joint venture, whatever, they don't get the full benefit of that, but, so that's been capped, which is great. And then finally, the only other payment is after a DFS, definitive feasibility study. There's another 100 million shares capped at 10 million. They're left with a 20% interest, which will be free carry to a decision to mine, and then standard dilution conversion to net smelter royalty after that. So all in all, that'll be about 10% of the current issued capital, which for a transformational deal is really
right. Okay, so that's what it's cost you. You say he's kind of done a lot of work up to kind of feasibility standards, but obviously you're going to have to go through the phases and actually do the studies, economic studies to show the market, what the potential is. So what's the starting point for you, given there's probably not a lot of, actual study work, economic reporting done. The work has happened, but the reporting hasn't. So where are you starting from?
So the first thing we've started, which is already in progress, is the first round of sort of more methodical test work on the leaching process. We'll talk about the deposit and the mining later, but there's very little risk compared to other things at the front end of the project. That's the other great thing about it. The risk lies in the middle, which is the metallurgical test work, and at the end, which is producing the final product at the specification that's required by the marketplace. And that is quite a specialized area of expertise, which we will need to build out. So that test work is starting. It's a very exciting program to be involved with because, as I say, it's a sort of unique suite of minerals. We're attacking them with a slightly different process, which is actually relatively straightforward. The chemistry is actually quite simple and should scale, but that's where the risk lies, is scaling that up. So that's where we started. We've got a resource will be due in the next 4 to 6 weeks, at which point we'll be allowed to put out the scoping study. So Roland has basically completed a complete scoping study level and very detailed. He has a background as an analyst. As he said, regretfully, he spent a year as an analyst when things were quiet in the geology business. And so he's done a very financial, detailed study. It's benchmarked against any of the other competitors, similar things. So look, that's where he's at, and we'll be building on that. Okay,
clearly, I'm not quite sure what the market's made of it. Maybe it's a bit too early to say. But your message to your current shareholders is, we've got something that is quite impactful. Oh, see what I did there? Impactful in terms of the value creation for the company. Yes, it is something new, but we're going to go through a process now from a much advanced position, right? So 2023 looks like what? What have you got to deliver this year? What have you got to fund this year?
So the big thing about the scoping study is that once the resource is out, we'll be allowed to put that out, and at that point, people will see the numbers that are behind this project at a scoping study level, so plus or minus whatever the number is, 30%, and it's at that point that people will be able to see the NPV, the capital efficiency, the internal rate of return, the EBITDA, and they can look at other players in the HPA space, and the numbers are similar. CapEx probably lower, and so when those loads come out, analysts will be able to look at the stock and say, oh, we can put a number on you. This is what you might be worth over the next few years. So resource will be out, the scoping study will be out, and then we've already commenced the pre-feasibility study. So there'll be results from that test work over the year. The other important event for us will be in the third quarter. We should be able to lodge a mining lease application and get that process underway so that we'll be moving towards development and production over the next couple of years.
Right, and what's again, given the advanced nature of the work you said he has done, you're going to need to move forward. PEA is great, PFS better. Because it's a little bit more accurate in terms of the economic component, because the variability of PEA plus or minus 30%, I say, in fact these days plus or minus 50%, quite frankly. How quickly do you move into that phase? I want to come back to the money and how you finance this in a second, by the way. So
look, the PFS is starting straight away. We've applied for some. There are many grants that you can get because HPA is on the critical minerals list of Australia now. That's opened up a whole plethora of grants and ways forward, which, look, whether we get them or not is a different story, but that's a big potential for us there. So the PFS should be done over the next, I'll say 18 months or 15 months by the middle of next year. But many of the things that we're doing will lead towards basically the DFS, and we're going to try and run as many of those in parallel as best that we can. And again, because the front end is so simple, will be almost a DFS level for that at the end of the PFS. It's all about the plant at the end.
Well, let's talk about the simplicity of this, because it's quite an esoteric commodity, right? Most people don't know anything about, they don't know HPA exists, quite frankly, I suspect. So whether or not it's on a critical mineral list is, by the by. If the market doesn't understand it, it's not going to get behind it or support it or buy into it. So what's important for people to know? You say it's on a critical minerals list, so what?
So when I was a young man many years ago, working for Western Mining, we were always taught, look, don't get into the sort of the bulk commodity or industrial mineral space. And I shouldn't have listened, because I probably should have got into lithium. But strategic metals, critical metals, they're all really euphemisms for bulk commodities, because there's a lot of it out there. And there's a lot of kaolin, there's a lot of things that we can convert it into HPA. The only reason you get into industrial minerals and into a bulk commodity is if you've got the largest, the first to market, or the lowest cost, because you will not get through the cycle. And, we've seen that already in lithium space. A few years ago, the 3 lithium mines opened up in WA within a short period of time. They'd all close again. Because the price had cratered. And look, there's more lithium than we can ever poke a stick at, and the rest of it. So this deposit ticks all of those boxes. It's a multi-decade sized deposit, and we stand a real chance of being a big player in a small space. And so you have control of the market price. And the theoretical OPEX that we have is significantly lower than all the incumbents, but similar to one or two of our competitors in this space, but all three groups are breakthrough in that cost. So look, that's the key. Those are the key things that people really need to pay attention to.
Right, they need to pay attention to that. You need to get finance. So existing shareholders or long-standing shareholders think, oh my goodness, dilution coming forward here. So where's the money going to come from, and how do you value the company? Because you've got a bunch of existing portfolio assets, which you've got to make some decisions on, whether you flip them out, sell them, spin them out into another vehicle, whatever you choose to do. If this is going to be your flagship and only focus, is that what you're saying?
It's certainly going to be. It's certainly our flagship, and it's going to be our main focus.
Okay.
So one of the other exceptional advantages is that we've done the calculation of how much metal might be contained there. I mean, that has all been drilled out for less than $100,000. So the dollar value is ridiculous. So basically, the groundwork is finished. So all of the money we need to spend is actually on the test work. And so we have a budget that's really in the $1.5 to $2 million work to do all of the pre-feasibility and get well into the definitive feasibility study, because it's just people's time and money, and also then the environmental approvals processes and the mining lease application. It is unique in that respect.
Have you got 1.5 to 2 million right now?
One of the things that's happened in the last week is that we've had calls from brokers for the first time in a decade. And it's like, it's nice to hear from you. And we've actually had a call from a well-known mining entrepreneurs group in London as well. I'll be presenting to them next week as well. And that's all come from people who've watched me present over the last 2 weeks. Because to be quite frank, when I tell the story, it's almost like I don't believe how good it is. And there's going to be some fatal flaws, I'm sure. Well, hopefully non-fatal flaws. There'll be difficulties as we go through. But the upfront advantages of this project are so good, it is quite difficult to wrap your head around. And but those stories have weaved through, to brokers and to, as I say, resource groups in London, and so it's going to be a slow burn. But I think, as I said, once the numbers come out on the scoping study, people will see what we can see.
Right. So it feels like there's some, and possibly the company needs it, is some fresh blood in terms of the investor profile, investors that come in with not just the money, but who they are and what they represent. We've seen some, pretty big conferences over here in Europe and elsewhere in the world, which is kind of focused on this sort of space in which you are now inserting yourself. So the money's available for debt, down the line. It's been thrown at people, and it's quite interesting how some of the equity sources are coming. The cost of capital component on the equity is potentially quite exciting in this space which you're going to be operating in. So, but in the short term, you did you say you're coming to London to have that conversation, or you've been speaking to people in London?
It's online. Yeah, it's an online thing.
Right.
Yeah.
Okay. So it feels like you got to get yourself funded for the next 18 months, and will the 2 million or so cover that?
Yeah, that's right. Yeah, on top of what we've already got. Look, we've got an R&D claim should bring back some good money. It's not, another one of the great advantages is that we do not need to raise a lot of money. And one thing that we haven't spoken about is that it's almost certain that for every dollar we spend on this project, we'll get 43 cents back in R&D the following year. The R&D is
explain R&D, because not everyone will understand.
Fair enough. Research and development. So the Australian government offers a rebate on money spent by companies under a certain turnover, which amounts to 43 cents in the dollar for every eligible dollar. So we've actually claimed quite a bit over the last 4 or 5 years because of some of the interesting things that we're doing. But in this particular case, because everything about it is new, from the nature of the mineralisation to the processing to even the marketing, we're going to be able to get most of the money that we spend on that project back.
Right. Okay. Fine. So it sounds like you kind of got a roadmap set up on the HPA project, which is great, and you'll probably tell us more as the weeks and months progress. But with the existing portfolio of assets, what do you do? What are you going to do with them? Do you monetize them?
Yeah, look, that's certainly the purpose of a sort of a brief strategic review. We're taking on Roland as a project manager for the Lake Hope project. He's going to run with the metallurgy. We'll employ metallurgical groups, environmental groups to help with the whole approvals process, etc. So that's going to be managed on its own. So I still have my team of geologists, but one of the big things, of course, that we've been working on the BHP Explore program over at Broken Hill since the start of this year. That's all been funded by BHP, and we've signed a lot of time and dollars to that, which has obviously kept our overheads low, and that's been great for us, and we're really pushing forward with that project. That leaves us with 2 other sort of sets of assets. One is the Commonwealth Gold Copper project, which is under an option to be purchased by a group over there to list, hopefully later in the year. And then finally, there's our Arkan flagship project, which was where most of our time and money was spent here in Western Australia for battery metals. That's a very early stage project. It is one of the larger ground holdings close to Julimar, and we have had already 2 knocks on the door from significant groups to look at that project. And, who knows, we might be able to joint venture out of that, which really leaves us with only some small projects, which are, more than manageable, really. To keep those ticking along. So if we don't get a joint venture on Arkan, sure, there's a possible deal there, sale, IPO, or something like that.
Right. But what you're determined to do is minimize the allocation of capital to non-core projects going forward.
Yeah, absolutely. And that's always what we try to do, try to keep some of the tenements in good standing by spending the minimum necessary, just to keep them on the books like everyone does. And but if we can come across a good opportunity to monetize whatever that looks like, then we'll certainly take it.
Do you think you can take this project forward yourself? Would you look to partner on this, given this scale of what you see ahead of you? I mean, it doesn't sound like you're going to need a lot of money. So from a financial point of view, maybe not, but maybe in terms of market perspective, you might want to.
Yeah. What do you say, market? I mean, you talk about investors.
Well, I'm just talking about getting noticed. I'm just talking about getting noticed. And let's face it. You've not worked in this space. It would be fair to say, you're used to working in precious metals, and we've looked at obviously battery metals, etc. This is a kind of new territory. So in terms of skill bases that you have in house versus what you may want to bring in house, you mentioned one, but you may want to bring partners in who give you access to markets. If you're going to move through the phases quite quickly, you've got to set yourself up for success during that phase and beyond. So, what are you thinking, or is it a bit early days?
No, look, those are great questions. And look, the big success story in the HPA space has been Alpha HPA, ASX code A4N. And that's run by a guy I know, Remus Karitis. He's a great operator, been a successful geologist, and has gone on board and really built them. And their market cap has gone from what ours has been up to probably 650 million over the last few years. Now, they're producing from a chemical feedstock as opposed to mining. They started off using a new novel process, which was working on their laterite, and then discovered that it would work on this feedstock that they could get from Orica. So Orica have actually invested now in A4N, Alpha, and they're also looking to establish now a market, another factory in North America. So it's quite clear that partners, the right partners, are opening doors for Alpha, and they're currently almost getting run off their feet now with queries, demands for the specialized products that they produce. And that will be the other area that we need to focus on.
Right. Okay. You've got a lot of new things to look at and process and articulate to the market, and obviously internally, you've got to work out how you deliver those things, because this is a new business model you've got here. You're going to have to think about the strategy you want to employ to deliver this. Okay. One of the things you talked about, looking at imminently, is the kind of metallurgical process, and I think you've talked about in your written communications, you've talked about cost disruptive. Now, that can make people excited or nervous in equal measure, because new things scare people. But if you get it right, that's pretty exciting in terms of margin. So what are you looking at on that front?
Yeah, so definitely new metallurgical techniques they can be difficult to market, in particular to financiers, because they don't want to be the first to perhaps lose their money on a new process. And but the way that the HP market will work, and Alpha are leading the way, we can get a small pilot plant going to start to produce the products, build out the offtake, build those strategic partnerships while bringing in a little bit of revenue. And then at some point, as Alpha approach, there'll be some big decision point to then build the bigger plant at whatever that capex turns out to be. So that's that. Yeah. So that's that area. And really the other, so that's the metallurgical process. All we can do is go through the test work. As I say, the chemistry is fairly straightforward and simple. It's a matter of scaling it up and working how we might be able to optimize that. And we should get a good handle on that very quickly.
Okay, fine. And we better sort of touch base on very, very quickly on in terms of all that kind of infrastructure type stuff. Okay, so Lake Hope, in terms of accessibility, cost of actually being able to do the work there, eventually you're going to need, the usual stuff: power, roads, water, etc. Where's that set?
If only we needed all of those things, Matthew, that'd be great. It's really not until you get on the ground there. So next time you're in Australia, you're going to have to come and stand on the lake, because when you get on the lake pit and you realise what you're standing on, your mouth drops.
Mud, it looks like to me.
Yeah, it is just. It's just. There's been a few jokes on hot copper, which I don't go to. It's never good for a managing director's health to go on hot copper. They're talking about losing drill rigs in the lake and things like that. Well, the lake bed, the lake material is only a couple of meters thick, and you're actually on quite solid granite underneath, and it's rock hard virtually all year. So when it rains, because it's almost impermeable, it's like plasticine. So there's no problem there. So there's an actually established fire break, which is almost 2 trucks wide, that goes from the main Hyden and Norseman road right up to the lake. So there's virtually no clearing required. And the ease of mining is something which people can't understand, given the value of the material that's there. Is that we literally need a digger and some trucks, some portable accommodation for probably 6 to 8 months of the year. We can mine 3 years production in about 8 months and not go back for 3 years. We can come off site leaving absolutely hardly any trace. There's going to be hardly any clearing. And the lake bed is sterile. There's not a blade of grass there. Stegofauna are a rare species that people are talking about a lot. It's quite acidic. It's pH of 3, so there's very few living things even in the lake bed. And those advantages keep going on and on. So because it's fine grained and it's almost solid ore, there's no need for waste on site. We don't need electricity on site. We don't need water on site. It is mind-boggling, really. So we're going to be able to dig up, take the stuff off-site to an existing industrial yard, and that's where we'll build the plant.
Very interesting, Mike. Well, look, thank you for taking the time out to speak to us. I was intrigued by what you've done here, because I think it's a big move. It's a bold move. And I think as more people get to hear the story and sort of understand the market that HPA operates in, and your ability to kind of move this thing forward relatively inexpensively. I think it could be interesting days for you. So I appreciate your time. Thank you.
No problem, Matthew. Anytime. Speak soon.